I think welcome to our first podcast of what we hope will be a long journey of podcasts. And today we have our head of department, Anton Lockem, and myself, Chrichan, and we'll be discussing the second take of the budget for 2025. And I think before we delve into the fun facts and the things that people need to know, from a policy perspective, Anton, I know you have a lot of thoughts and feelings on this. What do you think?
Chrichan, it's never easy to balance a budget. I think that's the starting point. This is take two of the budget, which also shows us that there was not consensus within the GNU of what the budget outcomes should be. There were talks initially when the first budget was postponed. There were talks about a 2% increase to VAT, which is a substantial increase. That was obviously sent back for discussion. And the budget yesterday revealed a slightly less drastic approach, whereby VAT was increased by 0.5% for this fiscal year and 0.5% for the following fiscal year. So that, without a shadow of a doubt, is the biggest takeaway of the budget. There's expenditure, substantial government expenditure that has to be met. Our debt to GDP ratio is quite high, and those need to be serviced. And I think from a policy perspective, the easiest way to have dealt therewith was to increase the VAT rate. I think the estimate is that the proposals in the budget will raise an additional 28 billion in revenue for this fiscal year and 14.5 billion for the next fiscal year. And clearly a large portion of that would be attributed to VAT. We've always maintained the view that we need to see a growth budget. A growth budget means that there must be policy incentives at play to encourage growth, but growth that is sustainable. And that means that a larger portion of the population must participate in the economy. If you look at the unemployment figures, that simply is not the case.
No.
How do we create opportunities in the economy for the broader population? Well, it all starts with business, small business, stimulus. And I haven't seen enough of late and in this budget to suggest that those policy incentives are coming through. You know what? The cake is only that big. And you can't keep slicing the cake into smaller pieces. We need to make the cake bigger.
Oh, there's more people eating from it.
So there will be more people eating from it. But I don't underestimate the difficulty in balancing the budget. Clearly, it's not easy to do. So that was the main trigger point for additional revenue in the budget. Unfortunately, not enough from an incentive perspective to encourage small business development, because as I said, with small business development comes additional growth and employment opportunities that goes with that. There are some interesting proposals in this budget, and it's at this stage it's just a proposal. This must go back to Parliament, and it must be voted on before it can become law. So who knows what the final product is going to look like? But some interesting proposals in the budget. And I know you have some thoughts thereon, but before I ask you what your thoughts thereon is, the encouraging thing for me is that the corporate tax rate for companies have not been increased. There was call for that. There was also call for an increase in the personal income tax rate. So I'm happy to see that there's not an additional burden placed on those taxpayers who are already substantial contributors to the fiscal base. I think for the last 2 or 3 budget speeches, the point has repeatedly been made that we cannot overburden the company tax rate. And then if we compare ourselves to the rest of the world, we are quite high in any event. So what are your takeaways from the specifics in this budget?
So, well, further to the specifics, which don't really go, well, they do go with this, but the fact that they haven't increased the tables for inflation. So, and I think they said just from not doing that, they're going to, I think it's 19.5 million or billion. I can't remember. It's in here somewhere, but so they're going to raise that by not doing that. So to an extent, I do think we might feel it, especially those on the cusp of one of the tables.
In the
personal income tax,
okay.
Yes.
Because it is quite a misnomer to say we haven't increased the tax rate.
Yes.
But we haven't made inflationary adjustments on the tax brackets. So where you fall into a higher tax bracket because of an increase in your earnings or whatever the case may be, then you are going to pay more tax.
Yes, and even though you get let's say your increase is 4% or 5%, you end up walking away with less because you pay more tax. So, but yeah, we'll see how that plays out. But to the specifics, and I have a few of them which I really thought are interesting. So what I'm going to highlight now is obviously not a full debrief of the whole budget. I think it's just pieces that stood out to me. And obviously if anyone wants to have a full debrief of it, they're more than welcome to come and chat to us. But I think the first one, which I quite like, is that child maintenance payments, which aren't made from retirement funds. So on the one end, you're being taxed on it when you receive it. And on the other end, it's not a deduction. So what they're going to do is they're going to make an exemption for that. So I quite like that. I think it closes the loop nicely. And it goes back to what the policy objective was with that. So, and I think a couple of places now it comes up where they want to go back to the original policy intent, which is nice. It means they're looking at these things and it doesn't just get lost through all the amendments. So it's nice to know that they go back to what they were trying to do with it. So that's more from a family law kind of perspective. And then something moving on from family as well is they talk about taxation of trusts and their beneficiaries. And obviously we had...
Because that's been quite a hot topic over the last couple of years.
So we've had
some court cases.
The Thistle Trust case, caused great trauma to most, yes. But all they say is that it comes to the government's attention that the interaction between Section 7C and 25B and the treatment of income and assets vesting and beneficiaries of trust, they have unintended consequences when non-residents are involved. And I'm interested to see what they are going to propose on that. They just say it's proposed that these aspects be reviewed. So I'm not sure what they want to review further.
Because when it was changed last year, the objective with that was that you can't attribute income and gains to a non-resident.
Yeah.
It is unclear what those unintended consequences would be.
I agree. So we'll see that space. But as you said, these are just proposals. It might not even make it to the bill. Something else which I quite liked, and when we had the tax ndaba with SAIT September last year, you participated in a panel and the call was that there should be another voluntary disclosure. So this is not quite as exciting as that, but they are going to propose that in the Customs and Excise Act that there be a voluntary disclosure in that regard.
And that is important. That is important because customs and the rest of the tax acts have been divorced in as far as their application is concerned. Because the Tax Administration Act, which governs the rights and obligations between SARS and the taxpayer, covers income tax, VAT, transfer duty, all the direct and indirect taxes. But excluded from its ambit, but for very limited circumstances, is the customs legislation.
Yeah.
So the customs legislation is dealt with on its own. It's dealt with in terms of the Customs Act, also as far as administrative provisions are concerned. So you could, even if you knew about a default from a customs perspective, you did not enjoy the benefits of a voluntary disclosure program under the Tax Administration Act, which of course goes hand in hand with remedies such as understatement penalties, no criminal prosecution, to name but a few. And now it seems that customs is also going to benefit from a voluntary disclosure program, which is probably going to look similar to that provided for in the Tax Administration Act.
Yeah.
But I guess we'll have to wait and see. But that is a positive.
I think so.
And that is a positive announcement.
And further to the interaction between Customs Act and the TAA, obviously they've now also discussed that VAT disputes on the importation of goods, which I know we are very excited about.
It's wonderful.
It is. So when there's a dispute on VAT on imported goods, you...
Remind me about that matter we had was...
Yes. So either you go and dispute in terms of the Customs and Excise Act, but it doesn't feel right doing that because this is VAT, and VAT Act is part of the Tax Act, which the TAA covers. So they've now made a point to say that, there's nothing that precludes anyone from instituting a dispute, whether that's objection, appeal, whatever, under the TAA. But I mean, in our matter, we went the TAA route and they said, no, this is a customs issue. So we went to the customs department and they said, no, this is a VAT issue. And it just fell through the cracks. No one wanted to deal with it because no one knew how to deal with it.
And it's so much easier to deal with it through the TAA.
Yes.
Because of the rules that are in play once you are in the TAA. It's crystal clear for everyone.
And the TAA would apply in any other VAT dispute except the import side. So very excited. We're not sure how that will look because they just say they're going to review the dispute resolution framework of both acts. So I'm hoping that we can put in some comments there that they should keep it in the TAA. Okay. So that's exciting. I like that. And then keeping with our VAT theme, I see that if you are going to voluntarily register for VAT, that they want to come and look at your premises to see where the business enterprise will be conducted from. I'm assuming this stems from all the VAT fraud going on. So I don't know if they'll actually do it. And I don't know if they have the capacity to do that. I don't know if they have the staff complement, because very early in the bill, they also mentioned that they're going to bring in technology and AI and I don't know what other things. So I don't know. I don't like the introduction of too much technology. I don't know how that fits in. And I don't think we can rely on it because a human body just makes better decisions.
I think that'll be a great topic for a podcast on its own.
Yes, we should. And then I think the last...
Tell us if, I don't know if you've got it covered there in your notes, but an interesting throwaway comment related to I think it's in consequence of the recent constitutional judgment in the Thistle case, and understatement penalties and what a bona fide inadvertent error means. What SARS is trying to say is that they want to clarify that it relates to substantial understatement.
Yes.
Which of course is not necessarily what the understanding from the recent judgment meant.
Yes.
So how that is going to be implemented and how it is going to be linked to substantial understatement, that will be interesting to see what the wording is going to look like. And also then, to what extent does it apply retrospectively, forward-looking? I'm unsure.
I think there'll be a very big uproar if it applies retrospectively. But then how retrospective are they going to do it? Are they going to say any USPs levied in terms of audits starting today? Because to an extent, that's retrospective. Or is it audits that will cover the next financial year only and not going back? I'm not sure, but I'm very sure they'll cast the net as wide as they can. And it is concerning that they only want to connect it to substantial understatement, because obviously when you impose understatement penalties, there's a table and you have categories. So if it's a substantial understatement, then it's 10%. And for it to be a substantial understatement, to be classified as that, your understatement must be, I think it's R1 million or 5% of what you've declared. There's a little formula there. And then the rest looks at your actual behavior. So 25% for reasonable checks and balances not in place, 50% for position taken not reasonable, and then it goes on all the way to 200% or 100%, as your behavior gets more malicious. So if you don't have reasonable checks and balances in place, which is the standard 25% USPs, then surely that leads to bona fide errors. I can't see how they can't link it to even just the first behavior category. Because, think of an example of our cases. This is where the pastel didn't pull through, for example. And that is a proper error. And I don't see how, if they don't link it to at least 25% or reasonable checks and balances, I don't see the policy. And now we are penalizing behavior that the legislature didn't want to.
I think that is a very good summary of the kind of questions that we are going to be dealing with quite soon. So I suppose the proof's going to be in the pudding.
Yes.
A, this bill must get through Parliament.
And I don't know if it will.
And we don't know if it will in its current format. And then B, once it becomes law, how is that going to be implemented and affect us in our daily live operations?
Yeah, I don't think it'll become a bill in this by next year. I think, especially the USPs, for example, I think that there's going to be a lot of to and fro between the
yes.
Yeah, but we'll see.
Yeah. Anything else that stood out for you? What about syntaxes? Are we still,
yes.
Unfortunately, I'm a smoker. Am I still going to be punished for my sins?
Yes, you are. You are. At least you know that those who drink wine, which will include me, as being punished even more.
Okay, so but they are there, as always. The usual suspects are there.
Yes, they are.
I was quite surprised to see the additional revenue collected. This as a result of the two-pot retirement system.
Yes, because they're estimated to collect about 5 billion rand, and to the end of Feb, it stood at 11.6 billion. So it's more than double.
Huge
or is it? Yeah, it's more than double.
Recovery.
But interesting, and they say it at two places where they say that, and I know this is an unpopular opinion because everyone out there thinks that, but that was not the policy intent for the two-pot system. So they are pleasantly surprised by the revenue that they've collected.
Obviously, a lot of focus because there's only so many additional taxes that come into play with a budget of this nature. So a lot of reliance will be placed on enforcement. The capacity of SARS to deal with verifications, audits, assessments, etc. So I think we can expect more of the same of what we've seen recently. In fact, there could even be an upswing in the amount of enforcement actions that are being taken. What would your advice to taxpayers be when confronted with a verification or an audit letter from SARS?
My advice would be to not just answer themselves, and it's just to seek professional assistance in that regard, because what you say down the line, it could affect any dispute going forward. And you want to prevent a dispute from happening because it is protracted. As much as the TAA sets out specific timeframes for it, you'd want to stop the dispute before it even starts. So if you do respond to a verification, well, that's to a lesser extent, but if you do respond to an audit finding, give a proper considered response, put the correct position to SARS so that they don't have to do all the work, considering that we already have questions on their staff capacity and whether it's AI doing the work on the other end. So put the correct position to them. And if they don't listen, well, then by all means, you go into the dispute phase if needed, because we know the dispute phase works. Whether or not at objection, it will definitely work at appeal or ADR. So yeah, I think that's what my advice would be. And from the debt collection perspective, and that's a fun fact not everyone knows, is that the debt collector phoning you and hounding you for your tax bill to be paid, he doesn't know, nor does he care that there is a dispute or that you are working with the SARS auditor, because that's not in his scope of work. So always make sure that you've got a handle on both, a handle on the debt recovery, whether that is through a suspension of payment or other arrangements, which we can assist with, or on the other side, where you talk to the auditor and you put the correct merit position forth. So yeah.
Okay. Well, that was very interesting.
It was.
From my perspective, I don't think there's anything else that needs to be touched on. I think the message coming out of this budget is that enforcement's going to play a greater role in the foreseeable future. And for us as tax lawyers, we'll need to guide our clients through the potential minefields and pitfalls that are associated therewith.
And we can do that in the next podcast.
And we will do that in the next podcast. We want to thank our listeners for joining us on our very first podcast. Certainly a new experience, and it was quite fun to do this. And we look forward to the next one. Thank you, Chrichan.
Thank you, Anton.